all-stars front, there's dozens of companies reporting this week and a lot of the big cap names that we all watch. So which one should you be watching? I've put together 5 of the top names for this week. It's only going to scratch the surface, but I'll have some more videos still to come. But these are 5 names that are on everybody's radar. We're all going to be watching them. Let's dive right in. The first one out of the gate will be Microsoft, ticker MSFT. I own this in my own personal portfolio. I know many of you own it too. But look at its track record. Great track record until last quarter when finally we had a miss from Microsoft, but still very impressive and hard to believe during a pandemic that they were meeting or beating all of those quarters. So what's happening with the stock now? As you can see, it is down off of its 2021 highs. Year to date, it's down 28%. And it is cheaper than it used to be. It used to trade around 32 times forward earnings. It's now trading at 24 times forward earnings. But is that very cheap with the Fed raising rates aggressively here? Many would say it's not. But you do get the dividend hanging out in Microsoft. It's yielding about 1% now. So there's a lot going on here. What will they report? We don't know, but everybody's going to be watching Microsoft this quarter. Then we're going to switch to the ultimate winner on earnings beats, earnings surprises, Visa, ticker V. As you know, you can see no misses here in the 5-year period, but no misses since it IPO'd in 2008. I know every quarter I'm jinxing it, but it hasn't worked yet. It's still meeting or beating every quarter. What's happening with these shares, though, outside of the beat? They are only down about 12% here year to date and off that 2021 high. So that's not too bad considering some of these big cap growth stocks are down much more than that. But still a little expensive, trading at 23 times. Similar story to Microsoft. The quality is kind of holding up here, but you're not getting it dirt cheap, not yet. You do get a dividend with Visa. It's yielding 0.8%, but you're not buying it for the dividend, much like Microsoft. So this one also is going to be one everybody's going to be tuning into to see how is the consumer holding up with what's going on with the Federal Reserve. So this is a big one, and I'm going to be tuning in as well. Then we're going to switch over to the restaurant side. Chipotle, CMG, I've called it the beast of the restaurants. I kind of switch between Domino's and Chipotle. During the pandemic, it really was Domino's that took control because it was at the right price point and you could deliver it easily. But Chipotle is in the delivery game and it's got a strong app too. So even though, it takes a while to get that free burrito, if you're a loyal customer, you will get there pretty quickly still. And as you can see, the earnings miss situation is very good with Chipotle. It did have 2 misses during the pandemic and then one far off there in 2017. But otherwise, it's beat or met or beat every quarter in that time period. That's pretty impressive. This is the old Chipotle before they had those PR issues and some of the food quality issues way back in the day now, years ago. So they've returned to form. How expensive is it though? So the shares are off their highs as well. Year to date down just 11% here. So not as bad as the S&P 500, which is down about 20%. But shares aren't any cheaper these days than what they used to be, still trading at 47 times. But there are still investors willing to buy and willing to get in here at 47 times. I'm not one of them. I'm still on the sidelines with Chipotle, but it's one of the few growth stocks that's really holding up. We'll see on this earnings report, but this is a key one. Then we're going to switch over to Teledoc, one of the big pandemic winners, as you can see from the chart, but now has pulled all the way back. So it does have a pretty good earnings surprise track record, even prior to the pandemic. It has more green than red, and it's beat 4 quarters in a row, including a big beat last quarter. but those haven't mattered. The shares are now down 73% year to date, and it really comes down to the earnings. So that Teledoc's now expected to lose $61.43 a share. The shares are trading at around, $25 or somewhere in there. So expected to lose 61.43. It lost just $1.33 last year. So it's really the earnings that's telling the tale here with Teledoc. But will they produce another big beat, and will things on the earnings front start to turn around? We will see. And then I'm going to wrap up this video with one of my favorites on the retail side, because we're starting to get a trickle of them too. And it's Decker's Outdoor Brands, ticker DECK. If you don't know it, you definitely know their brands, which are UGG and Hoka 11. So Decker's is kind of the Lululemon of shoes. It's in similar price point. It has strong brand recognition. And as you can see, it's got a great earnings surprise track record. Just that one miss in 2021. And now it's strung together 3 more beats in a row. Shares seem to have bottomed out in the summer and now getting a nice little rally here. But will this hold? We don't know yet. Year to date, the shares are now down just about 1%. So that's definitely outperforming the S&P 500, which is down about 20%. But what is happening with the cheapness factor of the stock? It's still trading at 20 times. I was waiting for it to get a bit cheaper there in the summer because I keep it on a watch list, but it never got much below 17 times. So didn't get cheap enough for me here. And now it's starting to get a little more expensive. So this is going to be one that I'm going to be watching on the retail side. It kind of just does its thing, and nobody pays it much attention except those who managed to get in 5 years ago, where they're holding on to a very nice winner here. But can they buck some of these slowing trends in the economy? Will the consumer continue to spend into this holiday season? That's what I'm going to be watching with Deckers. So it really is an interesting mix of companies that's reporting this week. A lot are going to get lost in the fray of big tech. We're getting most of the FANGs, plus some of the FANG men stocks with Microsoft this week. So they're going to take up all the oxygen in the room. But don't forget these great companies that are going to be just a little bit underneath the radar here. And I'm going to be watching all of these. I'm going to be tweeting out a ton of charts this week. So be sure to follow me on Twitter. You can follow me under my name at Tracy Reinick and get all those earnings charts. And also when I'm tuning into some of these earnings conference calls, which I'm going to be, then I'm going to be tweeting out about those as well. We're also getting some key earnings in areas like housing and energy, starting to get a few more on the energy side. So again, be sure to get all of our earnings content. You can get these videos at zacks.com/YouTube on our YouTube channel, and follow me on Twitter. And I'll see you again next time with many more earnings charts.